A very good day to everyone who is joining in live for the 12th session in fundamental and technical analysis training. So last 2 weeks we discussed about interpreting chart patterns, and this week also will also be a continuation of that. So this is the third week we are discussing about chart patterns, and anyone who is joining in for the first time, as always, I would like to remind you that all our previous sessions are there in our YouTube channel. You can always refer to them. So without taking much time, Saliya, I will hand it over to you.
Thank you, Charitha. And welcome everyone once again for this 12th session, where we are covering basically for the 12th week, the fundamentals and technical analysis. Today we are going to talk and look at symmetrical triangles. In fact, what will happen is that for a few weeks, we will be taking you all through these patterns, and we will be mostly covering some of the easily recognized and widely used chart patterns. And as time goes on, we might be able to even spot different chart patterns when we move to different advanced levels. So in the case of the symmetrical triangles and also any other pattern, first of all, we will be looking at the guidelines. In order to draw and understand, make use of the symmetrical triangle, first we need to spot a trend. That meaning, in order to qualify as a continuation pattern, an established trend should exist. The symmetrical triangle marks a consolidation period before continuing after the breakout. So remember, symmetrical triangle is a continuation pattern. There are two classes of patterns in technical analysis. One is called the continuation patterns. Other section is the reversal patterns. Symmetrical triangles falls into continuation patterns. So for that, you need to have a trend, ideally a long-term trend. Probably, when we mean by a long-term trend is a minimum of several months, ideally 3 months and above. So we need to spot the trend, whether it's upwards or downwards. Then you need to have 4 points. At least 2 points are required to form a trend line, and 2 trend lines are required to form a symmetrical triangle. So you need to have 2 points, 2 price points, and at the same time 2 trend lines. We will be looking at them. Therefore, a minimum of 4 points are required to begin considering a formation as a symmetrical triangle. The next thing that we will be looking at will be the volumes. The symmetrical triangle extends and the trading range contracts. Volume should start to diminish. While that extension and the contraction happens, the volume starts to diminish. This refers to the quiet before the storm, or the tightening consolidation before the breakout. Then the duration. The symmetrical triangle can extend for a few weeks or many months. If the pattern is less than 3 weeks, it is usually considered as a pennant. Typically, the time duration is about 3 months. So we need to understand that when we are looking at a symmetrical triangle, it's something more than 3 weeks minimum, or ideally 3 months. It does not necessarily mean 3 months, because we can spot triangle formations even at a shorter distance, but there is a difference between the pennant and the symmetrical triangle when it comes to time duration, sometimes outside the durations given here. The breakout time frame will be ideal breakout point occurs half or 3/4 of the way through the pattern's development, or time span. The time span of the pattern can be measured from the apex. We will be discussing that. Breakout direction. The future direction of the breakout can only be determined after the break has occurred. But attempting to guess the direction of the breakout can be dangerous. Even though a continuation pattern is supposed to break out in the direction of the long-term trend, this is not always the case, right? Then the breakout confirmation. A breakout should be on a closing basis for it to be considered valid. The breakout should occur with an expansion in volume, especially on upside breakouts. Return to apex. After the breakout, up or down, the apex can turn into future support or resistance. The price sometimes returns to the apex or a support or resistance level around the breakout before resuming in the direction of the breakout. That's why right along I've been talking about breakouts and throwbacks. Breakouts, retesting, goes up, comes down, right? That is important when it comes to even the breakouts inside this triangle. Then the price target. There are two methods to estimate the extent of the move for the after the breakout. First, the widest distance of the symmetrical triangle can be measured and applied to the breakout point. Second method is a trend line can be drawn parallel to the pattern's trend line that slopes up or down in the direction of the break. The extension of this line will mark a potential breakout target. Right, these are the guidelines, and we will be using the chart, which is the Brown's investments chart, and look at how we are going to draw based on these guidelines. First, we need to spot the trend, right? I'll be keeping this as it is, and I'm going to take you all through the weekly chart of Brown's. This is the weekly chart. The time frame is week. The reason as to why I'm taking a weekly chart is for us to understand that a symmetrical triangle ideally needs to have a minimum of 3 months. So if you have minimum of 3 months, 3 into 4 weeks will be 12 weeks. So, you know, at this, I mean, the triangle that we are showing you is more than 3 months. So this formation is ideal for us to learn how to draw the symmetrical triangle. First, what we do is first we will be looking at the highs and the lows, right? The highs have to fall, meaning making higher lows, and the lows will be making higher lows, the highs will be making lower highs, and the lows will be making higher lows. The highs are lowering, lows are going up, increasing, right? So you have lower highs at the top and high lows at the bottom. Then you need to have a minimum of 2 points, 2 price points. I'm going to pick this price point and this price point, right? This price point and this price point. So we are going to have a minimum of 2 points there. Then on the downside, I'll be using this price point and this price point, which is higher than the previous high, previous low, higher than the previous low. And here, this is lower than the previous high, right? I could take this, or even this is okay. But for I prefer to take the high of this candle. So first, we are going to draw a trend line sloping downwards by connecting this point to this point and extending it a little bit further. You will know as to why I am extending it like that. Okay. Fine. Then I'm going to change the color to brown to match the color combination here. Okay, incidentally, if you want to change colors and stuff like that, you can go to the settings or the format here, click. Then this side is the upside, this is the downside. So you can change whatever, you can use whatever color you want, right? So it is easily recognized. When the prices are going up, it is brown. Sorry, it is orange. When the prices are coming down, it's brown. Okay, now this is the downward sloping trend line that I have drawn by connecting the two highs, the lower high formation. Then similarly, on the other side, as I mentioned, I'm going to connect this point and extend it like this. Okay, this point and this point have extended. So this is your symmetrical triangle. So you had the highs, the lows, that's number one, rather the two areas. Then you have the resistance line and the support line. So you have 4 points as mentioned here, 4 points. Then the volume. What does it mean? The symmetrical triangle extends and the trading range contracts. The trading range, this is called the range. It contracts, it comes down, right? While that is happening, the volumes are falling. The volumes are falling. Interestingly, you know, a lot of people have started understanding the volume behavior. They say, you know, recently there was an example saying that Expo Lanka, the reason why Expo Lanka went up is because the PE was 7 and 2 billion was added into the move. That was yesterday. Yesterday's move was more than 4 billion. So 2 billion was added and the PE was 7, right? Now, whether the PE is 7 or 4 or 5 or 1 is immaterial. The chart is also immaterial. Volume, the turnover is very important. So for the turnover, we don't have the turnover numbers, but we have the price and the volume. You multiply the two, you get the turnover. That's why we want the price and the volume behavior, right? In the case of the triangle, when the contraction takes place, right, where the highs are lowering, lows are increasing, there's a contraction. When this contraction takes place, you can see that the volumes are coming down. This is, as I mentioned, is a continuation pattern. In a continuation pattern, what happens here is called a consolidation, an accumulation, a collection of shares, right? While studying all these patterns and so many other features, you will understand that the most important part in any trend will be the consolidation level. It's now we are using a weekly chart here, but it is not only the weekly chart. Even from 1 minute chart to 1 month chart, consolidation. If you know the art of consolidation, if you know the art of handling your positions at the consolidation area, right, you have mastered your investing and trading capabilities, and you are in for profits even without influence, without contacts, without knowing this big person, that big person, right? You don't need all that. If you understand how the price and the volume is behaving and how the consolidation is taking place, right? So when the contraction takes place, the volumes are coming down. The duration, right? The symmetrical triangle can extend for a few weeks, many months, so I mentioned that. Then the breakout. The breakout could be half or 3/4 of the way through the pattern's development. time span. And in order to look at the time span, we will be using the apex of the triangle. The apex is the meeting place of the two trend lines. The meeting place of the two trend lines is here. So if you here, if you take a price point, it's like 657. At 657 is where the apex is. At 6 rupees and 57. By the looks of it, you can see that it's halfway of the entire range. Or inside this, you can see that it's halfway. But it does not necessarily mean that all the symmetrical triangles will have an apex at the halfway or at a point higher than the halfway mark, right? That is not always the case, right? Then you have the apex, okay, and then the breakout direction. The future direction of the breakout can only be determined after the break has occurred, right? So attempting to break or thinking that a breakout will take place is not the case. You need to wait for the breakout to happen on closing basis, right? Now, I'll give you an example. Last January, when the market went up and tested 9,025, officially we don't take 9,025 as the all-time high level. As chartists, we take it. But officially, we have to take the closing value, right? Similarly, last 2 days, we saw it going up to more than 9025, but it came and closed below 9,000, right? Except for today. Today, we went and closed above 9,000 points. So it's a significant close, right? Now, in our case, what we do is here, the closing price has to be above the apex line. Closing has to be above the apex line. Now, here you can see it went up, but didn't close. Only here it went and closed, right? Thereafter, breakout confirmation. Okay, it goes up, then throws back. When it is throwing back, what happens is it is not always throwing back to test the apex area. It won't happen like that, but a throwback will happen, right? In that throwback, what happens is it will be within the pattern. Sometimes it can even come down to test the support area, the support line, right? Now, the next expectation has to be a breakout confirmation, meaning it has to go up again above the apex or the previous high point here, right? Now, there again, we can see here it went up, came back again, and then at that point confirmed the apex as the support. Thereafter, there was a breakout and the prices started going up. This is the weekly chart, right? During the last several weeks, we saw many instances where there were stories or some charts that were shown to sell the stock, right? They showed with reasons, they said to sell the stock around when the stock was around 680, 690. But if you have been working out with your own charts, you wouldn't have got misled with that type of explanations, right? So we have to understand these are arts. These are pieces of arts, right? if you know the guidelines, if you know how the market is behaving based on price action, no one will be able to fool you, right? That's why you have to equip yourself with understanding what is being either shared with you all, or you need to have an understanding to develop your own chart. And that has to be your ultimate goal, right? So when you see this, the formation is taking place, you see a breakout. Once this breakout takes place, now, if you are a person who is confident of this formation and the confirmation, right? You need to make use of an option in the buy window of a trade called the stop limit order. You can make use of that to place your breakout buy order. Okay, to place the breakout buy order. You have to make use of that. Then you can ideally use the setup according to your expectations in terms of the breakout as well. Now, the next thing is the price target. Now, in my case, I prefer always to draw the lines by using one full wave. I think I can, I mentioned about always practicing how to draw the waves. I think I mentioned last week, if I remember right. You have to spot the swing low, you have to spot the swing high, join the two. Then from the swing high to the swing low, join the two, right? Something like that. You have to keep on learning that. Like this, right? Something of that nature. Now, when I'm saying I'm looking at a wave, is by using, since I use the swing high point of this candle and the swing low point of this candle, I consider this as a wave, right? So when we are projecting, here it says the widest distance of the pattern will be obviously this point to this point, right? I go ahead and make use of this tool called price range. Click on it, and I will be joining the low point to the high point like this. That is the distance. I'm going to clone that. Take it up and drop it at the breakout point. This is the target based on this projection. That is the first way of projecting. The next is using the trend line, right, up or down, and copy that, whatever the trend that is in place, copy that in the direction of the breakout. What does that mean? Now the breakout took place this way, so the prices are going up. For the prices to go up, there has to be a higher low formation. So I'm going to take this trend line, not this trend line. I'm going to click on it, clone it, take this line and drop it at the top of the high point here. So this is based on the trend line formation. This is where the prices have to go up to, right? Remember, this is a weekly chart, right? This is not a daily chart. This is how you come up with a symmetrical triangle, right? Now that we know how to do this, let's, it will be interesting to just check some of the other counters, right? I would like to take you all through commercial bank first. Okay, in the case of the commercial bank, you can see that there is an uptrend here. This is the monthly chart. In the monthly chart, you have an uptrend here, right? The extension is from this point to this point. You have a trend extension, meaning an uptrend. This is the low, this is the high. I'm going to take this point and connect it with this point. My wave will be this point, these 2 points. And I'm going to connect with the high here and the high that you see here. Connect it like that. Let's zoom it a little bit further. Then I'm going to make use of this to this point. Right? So this is on the monthly chart. We can take it to the weekly chart like this. Okay. Now, here I'll be taking the distance between this and this, because I have taken these two, right? The reason as to why I'm taking these two is because if I'm going to take these two levels, it's not going to be a symmetrical formation. It's a different formation, right? If you take another way, it could be, no, sorry. It can be a symmetrical triangle this way as well. I'm sorry. Right, so I can make use of this or this and project this distance for a breakout. But the thing is, the apex is at the lower end, right? It's like 84, 82. As a result of that, we need to, even though there is a formation, we need to allow the breakout to take place either of these two areas, and rather from the resistance or the support, and understand what he's going to, I mean, in the end of the day, the benefit will be for us if we want to move into a position is a breakout above this. The only thing that is there is that as far as this apex is concerned, which is around 80, 84, 82 level, we can see that it is getting tested at that point. Reason why I'm using a bank is because a lot of people don't like to look at banks. Now, this is a weekly chart. I showed the monthly chart also, right? One day, people will be talking about banks. At the moment, people are not talking about banks, right? Even if you take this level, at that point, there is a little bit more than, or rather a bit lower than half of the range, but still it's almost like half of it. So that also confirms that this area is taking support on the apex line, right? If you take a projection, you can have this point to this point and clone it. and that is where it can go up to based on this projection. Or otherwise, if we take a project, before that, let's copy the clone and join with a trend line. The projection will be there. Of course, if we have a lower projection based on this, then it will be from this level to that. That's like it is at this level. Okay, so that's regarding commercial bank on the monthly and the weekly chart. Let's take ACL cables and look at the daily chart and see whether we have a symmetrical triangle. Now this, you can see that I'm using this point and this point as the start, and then I'll be connecting this point and also this point for me to make the symmetrical triangle. That is this point. No, sorry. I'll be using this point and connect it with this point. And then I'm using this low, which is the low of this wave. Now, as at the same time, we know that even though the prices have come down from the top here, from the January highs, the trend is still, the long-term trend is still intact. It is on a higher low formation, right? So therefore, we are going to take this triangle, and there had been a breakout during the last few days. And where can it go up to? The distance between this level to this point, clone it, like that. Here, because the slope is not that sharp, you might not see a big projection as a result of that. Basically, you can see that from here, if the trend extends, it can give you a return of almost 35% if you see the prices testing this level of about 59 rupees. That is at this point. Now we are here. So if somebody has bought here, then that return would have been still 22% if the 59 rupee is tested. Okay. Then we can also just test some other counters, so that we will be able to understand how those have performed on the daily chart. This was earlier some of the prominent ranges, right? This area, and this area. At the moment, we don't see that kind of major consolidations taking place, right? These are all major consolidations, right? But here you don't see that type of consolidations, but there are consolidations. We can move into shorter time frames and understand that. Before that, let's see when the market was here. This is in January, 64.60, and this is the low in February. Right, we will be joining this level, you can take it up to this. From here, you can connect it like this. The reason as to why we are looking at the apex is to understand how the breakout is taking place. At this point, it's 4860 area. This is the apex, 4860. So basically, you can see that what we did was we took this high to this high. So all this had happened, right? So we won't be looking at this area. But from here, we obviously know other point to remember is that we used this area and this point. Therefore, when we were looking at this level, all this had happened, right? So this apex line succeeded in coming in as a support line. That we can see that it came down, tested that area, and thereafter there is a breakout. And if you just do the projection from this low to this high, clone it. Once the breakout took place, we can see that the target was 77.70, giving a return of 49.69%. Right? Then another kind of an extension, or some, I would say, another formation of a chart. If you take your formation of a pattern, which is also a triangle, but not a symmetrical triangle, is the ascending triangle. Now, this is the RCL. This is the high, right? And we will be using that high, which is at 43.95. That is, let's say, 44 rupees. Right. Before going there, let's go back again to ACL cables and see how the, sorry, not ACL cables. No. ACL cables and check the volume behavior. That is important. I couldn't touch that. So you can see basically, take it up. No. Let's take, yeah. If you look at the, now we are monitoring this formation by using this level. So we are here, right? At that point, we had ample opportunity to understand how the volumes had behaved, right? So when the volumes like at this point, right, we know the volumes are increasing. At that point, we are watching how the volumes are behaving, right? And we can see that with the breakout, the volumes also had increased. So that confirms the validity of the triangle, and we can make use of these projections to identify our target areas purely on the basis of this triangle. That's for that. That's for the ACL. Commercial bank also. If you look at the commercial bank, right now, we can see that still this triangle is forming. In other words, it's that consolidation is still in place because we don't see any increase in the volumes, right? With the increase, if the price breaks out with volumes, that will validate the expectation based on the symmetrical triangle pattern. Very important for us to wait until the breakout takes place along with the volumes. If the volumes are not helping that breakout, that means it is going to be a weak breakout. At the same time, it could be the reason as to why the apex, the distance of the apex is less than half of the entire range, right? So in other words, what it means is that the accumulation needs to, we have to allow the accumulation to take a little while longer. That is the reason why, that the pattern is going to tell us about the stock, right? So volume confirmation is very important when it comes to the special, not only the symmetrical triangle, but in any formation or any trade setup that we have. For any trade setup, the volume behavior is very important. So in the case of RCL, right, you can see that this is an, I said, this is a ascending triangle formation. I'm going to make use of, you can make use of this or here, but I'm going to take this and join with this line and take it up like that. Okay. When the prices come down, right, a lot of people are asking what is going to happen, right? First thing that happens when the prices fall is that we don't like to see the prices falling continuously. We don't want to see that happen. If that's the case, this is the high. That is on the 27th of January is the high, right? On that day, the volumes have been, you can see here, 24.9. That is almost 25 million. Now the prices are coming down. At that point, we know that there had been a swing high here. So this swing high has to be broken for the prices to go up again. Right now, people are expecting the prices to go up. Why? Because, you know, for such a long period, even starting from here, that is from December, right? More than a month and a half, the prices had been increasing with very small consolidations. You can see only 2 days, here 3 days, here again 1 day, 2 days, right? So when you come here, you don't like to believe that there is going to be a trend reversal, right? That is, you know, after hitting a resistance, the reversal of this uptrend. They don't want to believe that. If that was the case, right, the volume also had to go up. This, you know, the next day, the following day, the volume had to go up about 25 million, right, to take it up to the next level. So the volume is very important, right, when a breakout takes place. That's why, remember here, it mentioned that when it comes to the volumes, as the, as the symmetrical triangle extends and the trading range contracts, volume should start to diminish. This refers to the quad before the, not there, where was this? Breakout, okay, here. A break should be on a closing basis for it to be considered valid. The breakout should occur with an expansion in volume, especially on upside breakouts, right? If you look at this, right, so the expansion, or rather the volume, the price extension was compensated or contributed by the volume extension, the expansion of the volumes. That means the turnover, the money that flew into the counter was increasing. But from here onwards, you can see that the volumes were coming down, except this day, right? At that point, you can see a major sell-off took place. 28 million shares changed hands, then that drop continued. You know, the reversal kept on, the reversal continued, right? So thereafter, we can see over this area. Now, again, incidentally, yeah, using this point and this point. So we are here. So we can have a clear, wider picture, right? If you glance very closely to the picture that you see here, you will see that the volumes are not, of course, the volumes are behaving, increasing here in order to make these up moves. But overall, the volumes had deteriorated compared to the volumes that we see here, right? Now, coming to this area, once again, after this, especially this area, you can see, these are like not only few days, for several days, spanning maybe about 2 weeks or so. More than that, you can see that the volumes have been lower, right? Here you can see, especially today, the push came, this impulsive candle happened with a major significant volume contribution compared to the previous days, compared to these previous days, right? Now here you can see the volume increased, the prices went and tested this high, right? It just went, kissed it there, 44 rupees, okay? The next day, tried to go above 44 rupees, went up to high of 44.70, threw back, right? And then we can see that at that point, another consolidation took place, a minor consolidation. And today, it moved up above this horizontal line, which is at 44, and closed. At the same time, you can see that the high of this and the low of this candle, today's candle, is 41.10. Pay close attention to this, right? These values. When I'm keeping the cursor there, you can see open is 41.10, low is 41.10, high is 46.10, close is also 46.10. You don't see wicks, you don't see shadows in this candle, right? This is a very, very strong bullish candle. You can see such candles here. You can see a candle like that here, right? This is another candle with the same formation, right? This, you have a small wick. And this is another candle like that. But there had been small differences. But here it's different. So this is a significant breakout. It's a major breakout for RCA, right? So what is the projection? How can you project this? The way we project this is by using the distance between this and this, right? So that's something like this point to this point. If you project that, then the upside has to be has to be about 66 rupees or 65.50. Okay, talking of a 47 point, almost 48 point return, 48% return. Now, while this is taking place, we need to remember that this 48% return is not going to come within a few days, right? It can take time, right? So it is our duty, our responsibility to understand and believe in this stock, right? I'm over and over again telling this to a lot of my friends, my clients. It's to do with believing in that stock. If we are really confident of this stock, then we will wait until this 48% is given, right? Until we realize this 48% return. Or otherwise, what if we want to make a trade, maybe in the short term? Then we have to satisfy with our own satisfaction, right? Whether it will be 10%, 20%, 5%. It depends on our satisfaction. A lot of people miss the point, lose a lot of opportunities because they don't understand the level of satisfaction, right? So we need to understand, we have to think and figure out how we are, coming up with a return on investment, right? At the same time, no one will tell you don't sell 10% or 20% or 30%. No one is going to stop you like that, right? It is your own, your call. You can sell a part of it, keep the rest, right? So there are so many ways of, playing around with your own strategies and understanding to place your sell orders. Just as much as you make a decision to buy, right? At that point itself, you need to make a decision to sell also, right? If you can make you understand where I'm going to sell. Now, patterns are helping you to do that. Here, it's giving you 48% return, right? You can, as a result of that, you see, from this area, from 44 rupees, for the prices to come up to this 48%, it has to pass 47.50, 50 rupees, 52.50, 55, 57.50, 60, 62.50, 65, 65.50, right? It's not an easy business. You need people to buy shares. You need turnover. So those are the challenges that you have to realize a projected target, right? So if somebody is trying to believe that just because we drew these levels, right, it's definitely going to happen, that you can't tell the duration. You can't tell when it is going to happen, right? So please understand that. One way I'm telling that, the way I understand, right, the way I have monitored, I draw a horizontal line here like this. Then I'm going to extend this line to the right side, right? Now that is based on this slope, this angle. Sorry. Based on this angle, if the stock, now I'm presuming that the prices are going to just keep going up, increasing daily based on this higher low angle. This higher low angle. If that's the case, if we start going up like this, you can see how this line is passing these levels, right? Okay. At this point, this line meets with this price. So if by any chance the prices are going to respect this angle and just, you know, keep trading, say, imagine that this is a car. Imagine that this is a road with an incline moving up. So let's say this car is going up this way, right? At this point, it will go up to 65.50. So then what we do is, thanks to this date range, we will know right from here how long it will take to go up to this level. 163 days. In 100 and so then I know, okay, maximum holding period, as long as the price is holding this angle, the maximum holding period will be 163 days. And I'm going to get 48% return. Give away for the brokerage, 2.5%. Still, I'm having 45.5, little over 45% return, or almost 46% return in within 163 days. But of course, if the prices are going to hit this area well before that, then this side of in less than 163 days, I will get it. That is another addition to our projection based on trend lines, right? It doesn't mean that, you see, there again we have reasons to believe like that, right? There are certain criteria, certain guidelines for us to believe like that, right? If the price is going to fall below this, then I'm going to take a decision. Or otherwise, if let's say it is not going here within a certain period of time, we can close our positions based on the return that we want. So in order to avoid all that, we need to have our minimum return, and we can decide to, you know, sell at least part, maybe 25% in that minimum return. Those are very important for people who are using the online trading system and using the technical analysis to trade and invest. Of course, if people, highly influential people, because, you know, in the country, we have a lot of ways of, you know, getting information, right? That is a different story. We are not, technical analysis doesn't believe in information, right? Outside information, people telling buy this, buy that, that's not the case. So that's basically what we have for you all today. We will be elaborating a little bit further on ascending triangles, pennants, and the flags next week. So if you all have any questions, you all can, it's open up for Q&A now. Okay, even if you all don't encounter anything now, that's okay.